Hello, welcome to Arise News. You're watching the Global Business Report. Rhoda Sodiri here. We're in Lagos, Nigeria's commercial capital, and there's a whole lot going on across the business world and geopolitical as well. Kicking off with U.S. President Biden pushing for a Gaza ceasefire as Hamas resistance continues. He's been speaking with Prime Minister Netanyahu of Israel. Also, tariffs. I got a retort from President Sheinbaum of Mexico to President-elect Trump of the United States. They've been talking, and she says, hey, listen, if you hit us with tariffs, we could retaliate. Also in Asia, South Korea, first back-to-back rate hike since 2009. They're worried about tariffs as well. And in Nigeria, tax reform, it's not easy. We had a big kerfuffle, if you will, in the Senate. We'll bring you that report as well. Global Business Report. Do stay tuned. All right, we begin in the energy space. All eyes on Israel-Gaza following, of course, that ceasefire deal that's been reached between Israel and Hezbollah. So this, of course, is a telephone conversation that happened between U.S. President Biden and Prime Minister Benjamin Netanyahu of Israel. President Biden is stressing that they need to use the ceasefire that has already been agreed with Hezbollah as a catalyst to get a ceasefire with Gaza and get the hostages out. And he says, listen, you cannot delay this any further. Let's get this done as soon as possible, possibly before Inauguration Day, January the 20th. Oil traders also looking ahead because you've got the OPEC Plus meeting over the weekend. But this, of course, let's see what happened earlier. Trading today, Brent crude $72.88. West Texas still under $70. Nigeria's benchmark, of course, $77.96. Natural gas up at $3.22. Let's talk to Dr. Carole Nakhle, who is, of course, the CEO of Crystol Energy. She is joining us from London. Dr. Nakhle, good morning to you. Thank you so much for being with us. I wanted to get your take on the ceasefire between Israel and Hezbollah, I guess, to kick things off.
Good morning, Rotus. Well, look, I mean, any ceasefire that stops the horrible bombing and the killing of civilians and the displacements of civilians is actually good news, and we should welcome that. However, I fear that this is where the good news ends, because a ceasefire is not peace. We are still a long way from having a peace. We don't know how robust that ceasefire is going to be. We don't know whether either party is going to stick to the terms of the ceasefire, because, mind you, there are always some pockets of resistance here and there who would break the terms of the ceasefire. So this is really what the situation is. Unless we see some serious development and commitment to the ceasefire terms, then we feel a little bit more relief. But at the moment, I fear it's good news because the bombing has stopped and some civilians can go back to their houses. Though in Lebanon, I'm thinking about all the destroyed villages. They would go back to what? To where? Many people lost all their homes. They have nowhere to go. But at least there won't be any more civilians attacked and dying because of the bombing. So that's the good news. But I fear I would like to see much more than that to have a reason to celebrate.
Now, well said. So do you think that could influence the talks with Hamas, or is the context too different? Because, of course, President Biden did have that phone call just a day or two ago with Prime Minister Netanyahu. So could that be a catalyst for Gaza, or are they too different?
I think it would be a mistake to compare Hezbollah with Hamas or Lebanon with Gaza. It's a completely different game. And for example, you already heard from Israel a few weeks ago, if not a few months ago, saying that their main military targets in Lebanon have been achieved, which mainly tell us that they were about to kind of reduce their attacks on Lebanon or accept some kind of ceasefire, because Lebanon is much bigger than Gaza. Hezbollah is much more widespread than Hamas is in Gaza, and it would take much more bombing and attacks and more on-ground invasion by the Israelis to really wipe out Hezbollah, if this is what they would like to do. They have definitely weakened Hezbollah, but mind you, they said the same in 2006 when they did almost the same and actually attacked Hezbollah Hezbollah. But then 18 years later, Hezbollah emerged stronger with the continuous support of Iran, and even more so as well Syria. With Hamas, it's much more contained. There are hostages involved, and it's a clear condition to achieve that kind of ceasefire. I think any kind of ceasefire in Gaza, while maybe we can be hopeful, will have to come with very tough conditions, including the release of hostages and what Hamas will get out of that ceasefire. So I would be careful comparing the two, but hopefully, what else can we have in the region but remaining optimistic and hope for the better?
Indeed, indeed. So I want to how does that flow into oil prices now? How have you monitored the movement of oil prices? How much of an influence has all of this had on prices of crude and so on?
So first of all, any geopolitical tensions, particularly in the Middle East, would put an upward pressure on prices, on oil prices. But that's what we call the geopolitical risk premium, even if it does not translate into supply losses, because people will always be concerned that the situation might escalate and that would lead potentially to supply losses. That scenario has not happened. Still, despite the war in the Middle East, in Gaza, on Lebanon, the attacks on Lebanon by the Israelis, on top of what's going on elsewhere, like the Russians also intensifying their attacks on Ukrainian energy facilities, we see that oil prices did not increase significantly. There were a couple of dollars added to that, but they were not really, we did not see the spikes that we are accustomed to when there were troubles in the Middle East. So if you take that kind of geopolitical risk premium away today, because of the ceasefire, now you would expect to see those dollars, those added dollars dissipating from the oil price, and would see prices that they are trading where they are today. At the end, what really drives prices are market fundamentals, global demand and global supply, what OPEC will do, what the US will do, how the Chinese economy is performing. These are the structural factors that translate into actual volume in the market being affected.
All right, thank you for mentioning OPEC. So OPEC Plus, they're scheduled to meet December the 1st. I hear it's an online meeting. We're already hearing from some sources, I think it was Reuters that was reporting that they might hold back on adding any barrels to the market in January. How have you observed what's been happening? What do you think OPEC is likely to do?
First of all, we have to recognize that whatever OPEC decides to do, it's not cast in stone, because they do tell us, always, if you notice in their announcement, that they do refer to depending on the market conditions and the market signals that they are getting. We know that OPEC, for the first time since August, in their monthly oil report, they have been downgrading their demand forecast for oil for this year. And for next year, the picture doesn't look much more optimistic. So so far, we are seeing also some green shoots from the Chinese economy, but not much for us to say that's it, we're opening a new chapter in oil market fundamentals. So that's the first thing to recognize, that OPEC decision is never cast in stone. They can postpone and they can delay until market conditions become more favorable. So overall, if I take into consideration the market conditions today and where prices are, I feel that, yes, there is a high chance that OPEC might defer its production cuts for maybe another month or even another quarter until market conditions become more favorable and accommodate these additional barrels in the market. That said, we also have to recognize that some members within OPEC are not really happy about keep on curtailing their production. They prefer to put more volumes in the market and live with whatever extra revenues they would get under current prices. So you do have the internal situation that OPEC has to come to terms with. And also, don't forget, we don't know what will happen with the US when President Trump assume office in January. What will we do with respect to Iran? Is he going to strengthen the imposition of sanctions on Iran that would take easily 1 million barrel a day from the market if he exercises maximum pressure? So what will happen with Russia and Ukraine war? So there are lots of uncertainties at the moment. But so far, if I just look at it from today's picture, I would say there is a great chance that OPEC might defer its release of extra barrels that they planned for January next year.
All right, thanks. You mentioned President Trump and Iran, and thank you for introducing it. I actually forgot about the Iran side of things. But President Trump's mantra is, quote unquote, drill, baby, drill. But under Biden, the U.S. has already been producing so much oil. I think it's 13 million barrels per day this year versus about 12 last year. Do you think U.S. oil output can increase further under a Trump presidency? And what would that do to, I guess, global supply and prices?
I mean, definitely the arrival of President Trump to the White House provides a confidence boost for the oil and gas industry in the US, because it has been really demonized, if I may say, under the Biden administration. And they made profit, by President Biden called that war profiteering in 2022. But would that translate into actual increase in production? That remain hugely conditional to on market conditions. What the prices are, what prices do we have in the market? It's not because we have a new president in place that tell us, great, drill more, drill, but actually the market conditions are not, you cannot accommodate this additional drilling. That will not necessarily translate into higher oil production. He definitely supports more gas exports, because remember, Biden introduced a moratorium on approvals for LNG export terminals. Now, definitely President Trump is going to get rid of that. So we're going to see a confidence boost, but to see the drilling translating into actual production, we'll have to see market signals supportive.
Dr. Carole Nakhle, CEO of Crystol Energy, thank you so much for your input on oil prices and what to look out for in 2025. We appreciate your time.